Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from the home office today in Chicago on a beautiful Thursday morning. Joining me today, as always, from Kansas, Director of Feed Procurement, Mr. Jake Kingsley, and from our Dairy Risk Management Squad, reporting from Chicago office, Vice President of Commercial Services, Mr. Brian Fletcher. Team, how are we today?
Doing very well this morning.
Doing great. First time on the Grain Feed and happy to be here.
Dude, welcome to the show, Fletch. We are very excited to have you on. How are things in the office today?
Couldn't be nicer in Chicago, bright and sunny. About 40% of our Chicago team's here today.
Yeah.
So feeling good. Again, excited to be here. Just do not ask me about corn because the only thing I know about corn comes from you and Jake. So
therefore you don't know much about corn then. If all your information is from me, you don't know very much.
I listen from the periphery and have to say, I remember 3 or 4 months ago, you guys calling a lower market, and it's a pretty good track record from my perspective anyway.
Well, we appreciate you saying that. We certainly try our best, and we can't always call the market perfectly, can we, Jake? But yeah, there are certain things that we've been able to try and gauge at least over the last handful of months. So I think the key now is, Fletch, just like we do on the dairy side of things, let's take advantage of what the market has given us. I think we could potentially say the same if you were a milk producer, given milk prices here lately. But I won't wade into those waters for the time being here. So let's just real quick, Fletch, if you wouldn't mind letting the viewers and listeners know who you are and what you do here at EverAg.
Thank you. Brian Fletcher. I have been with EverAg a little over 15 years, and during that time have spent most of that time working with the manufacturers and end users within the dairy supply chain. So I would say the biggest core of the group would be milk into the manufacturing, and then dairy products would be the output. So we spend time managing the price risk that is inherent to those businesses. So a lot of times that would be managing the milk input cost and then the dairy product revenue and the various risks within that. We have a team of about 6 or 7 people that also focus on that. And in general, we're structured as an introducing broker. So we're primarily using the exchange and over-the-counter venues and pretty agnostic in terms of where we would go, have a holistic approach in terms of managing price risk. So it's a really exciting part and happy to speak to anybody about it that has interest in that.
Excellent. Well, thank you very much for that. Yeah, you are an integral part of EverAg and everything that we do and one of the senior leaders here. So we appreciate you taking some time to be with us today. Since we do have a lot to run through, Lexi, if you would kindly timestamp the broadcast, it is 10:15 or so here on Thursday morning in Chicago. You know, for us that are in the city and our kids in the public schools here, we got 2 more days of no school. School starts Monday. So we're very excited to have children returning to school. So I'm assuming we're about 20 to 25 minutes into Paw Patrol here at the moment. So just to give the listeners a gauge of where we are on Thursday morning. To also give you a gauge, when Lexi, we timestamp this broadcast, we will note that the markets are lower here at 10:15 this morning, at least on the grain and feed side of things. So the screens are red, at least on the quote boards that Jake and I are following. We have December corn futures down towards $3.95 now. So we're down about 3 cents on the day. And again, hovering below that key $4 per bushel threshold. We have November beans again on the slide, down about 17 cents. We're at about 9.65, let's say, for Novi beans. And then December meal, that not as stubborn little byproduct, it is inching its way back down towards $300 per ton. We thought it was going to be a bit more stubborn, creeping back up in that 310 type of range over the last several sessions, but we're back at least heading the right direction or so where we would want it to be for a dairy producer. So inching our way back towards $300 per ton. That all being said, as we talk about what's happening in the feed markets and how it's impacting the dairy markets, Fletch, you've been out and about here over the past few weeks. I believe you spent some decent time in your home state, the great state of Idaho. We also had a key report come out on yesterday afternoon. So there's a lot happening here in the dairy markets. What have you been seeing and hearing, Fletch?
You're right, Jim. I was on the road for about 2 weeks and spent a lot of time in the home state and hometown. And it was great to see the industry out there. It's been about a week and a half, so information may have changed a little bit, but I would say the common theme while I was there from a pretty universal perspective within the state was that milk production continued to be tighter than the processors would like it to be. We had the July milk production report yesterday. Over the course of July, production was down about 1%, which is a little better than what it was over June. But in general, Idaho, similar to a lot of the western states, had a pretty hot stretch in the early phase of summer. And we're thinking between that and then, the general bird flu element had some impact on production there. And I say that because I think when you say tight, I think we're in the middle of summer, and it's from a seasonal standpoint, that's normal for the market to be tighter from a seasonal perspective. But I think tighter than what the market was anticipating it to be, say, 3 or 4 months ago. Within that, there's a large amount of commercial cheese processing that takes place in Idaho, specifically in barrel cheese. It's hard to know whether or not it's had a direct influence. My guess is it's part of the reason why we're seeing barrel cheese now at the highest price in a couple years and the highest price of the year, approaching $2.30 a pound. Either way, that was a main takeaway I had from that trip. And in general, now, a week and a half later, still hearing that it's quite tight out in that part of the world. What has changed, though, is there's been other pockets of milk supply that are starting to loosen up to a certain degree. We've heard of that in the upper Midwest, more free to sell milk, which a couple weeks ago was not the case. Scouring the milk production report released yesterday, the state of Texas, I want to say it was close to 6%. That's had a quite dramatic rebound relative to where it was this spring. And in general, the milk production report came pretty close to in line with our expectations. The headline number was 0.4% lower. Our insights team was anticipating about negative 0.3% lower. So that's pretty close to expectations. I think the other analysts in the industry were expecting anywhere from minus 0.5 to minus 0.1. So kind of right in between of general analysts' expectations. Within the U.S. market perspective, we're still operating under a deficit of milk production on a year-over-year basis. It's also important to know that last July's milk production report, we're comparing over a much lower baseline. Even though it is a improvement versus June, last July was a much lower number. There's kind of, I would say, more mixed results. There's pockets of improvement here, but in general, the theme persists of lower milk production. There's that within the states. I think what the other element that is really move from the back burner to the front burner that is very important for the dairy market is the U.S. market has not been moving higher on its own. We've seen the European dairy market also move in conjunction with the U.S. And that is important because that milk production for the European and UK regions is about 1.5 times the size of the U.S. And so when you have the European market moving higher, that influences the entire global perspective. And so it's not the US market moving higher in a silo right now. And I would say the main reason why the European market that we've been able to pick up at this point is similar reasons. So we're, lower than expected milk production in some of the Western European large producing countries. And they're also dealing with some illness on farm as well, different type, but that could also be having an influence as well. And then last but not least, and then happy to answer any particular questions or pass it off to Jake. But the other element that has changed that is now on the front burner is demand from an international perspective that has been a bearish variable for a long time is now in question. We've had 2 consecutive GDT events over the course of the last month where North Asia or Chinese participation has been significantly stronger, to the point where we've seen whole milk powder, which is the primary product that is sold into China. The general pricing of whole milk powder has moved about 11% higher over the course of the last month. The market has been operating around China being really not in the market to the same degree that we know that they can be. And now we have 2 consecutive auctions, which isn't necessarily a trend changer, but it definitely brings a lot more attention on it. And I would say, the next GDT event is people are going to be glued to it to see if we see that trend continue. The element within that, we haven't seen corresponding evidence that China's back in full force. So at this point, there's a lot of macroeconomic data coming out of China that still suggests that there's general problems from a macro perspective there. But at this point, we have a pretty niche increase in dairy imports, at least through GDT, that the market has definitely taken and added more risk premium back into almost every any powder forward market, whether it's a US, EU, or New Zealand.
Okay, so I feel like we've been focusing a lot over the last couple weeks, especially after yesterday's report, and you've emphasized, right, the supply element of this is very much a bullish factor. Of course, that demand side, if non-existent, maybe it's not as helpful overall for pricing. And if supply does recover and demand is still weak, ultimately you bring those prices down. So I think it's super interesting then to be focusing on some of that international activity to see if demand picks up. I know for like Jake and myself and our squad, we're very much watching the same, right? We've seen the US dollar continuing to trend lower, really the entire month of August, providing an impact for the international community that needs to buy a US denominated commodity. It provides greater value to their own currency and better buying power, especially when we see these feed prices come down. That makes it even more attractive. So we've seen China, unknown destinations. Often then is China ultimately buying a decent amount of US soybeans and soybean meal. We've seen a little more activity from Mexico as of late. So it's super interesting then for you to reference the last 2 GDTs to show maybe there's some life returning there. Is that short-lived or not? I think it's going to be super interesting. From the domestic side of things, Fletch, I referenced that I've got my daughter upstairs getting ready to go back to school on Monday. Here in Chicago, we've got kids obviously south of us have already been in school, like towards Jake's part of the country and further, already in school and or have been for a week or 2 now. Is there anything from a domestic standpoint of kids going back to school? My daughter is just chugging milk at school all day when she's there. And then we get to see what happens after that as well. But the milk consumption up when kids go back, people consuming pizzas and nachos during football season. Is that just that's what Jim Matthews sees and thinks, or is there actual validity to that from the dairy demand side?
Yeah, no, that's a great point there. I would say that in general, this time of year with the transition back into school adds to the already seasonal tightness that takes place just from a milk production perspective. Not only are we generally at the doldrums of milk production, but you also have an increase of pull of milk out of other dairy products into fluid milk. So that's absolutely taking place. And I think that's a big reason why we're seeing the basis of spot milk trade anywhere between $2 to $3 over class right now. So there's that. But, the hard part about that, Jim, is every year. It's widely anticipated that will be the case. But I would say from a general U.S. domestic demand, what the trends that we've been seeing take place is the retail sales of dairy products have been, within the cheese segment, have been quite good. And then the butter side has been pretty mixed over the course of the last few months. The food service side, though, in general, we would look at food service, especially without promotional activity, as being a bit of a negative in terms of dairy demand right now. So maybe as we transition into the fall, that can change. There's also been some hints that some of the larger pizza chains, which drive a tremendous amount of cheese consumption, are seeing improved sales. But in general, I would say the food service relative to retail has been the weaker of the two. We're diving into some of the earnings reports of the larger retail chains. Walmart and Target, I think, was earlier this week, and both are noting very good sales from a perspective, which we kind of look at as the general inflation story that we've been navigating for quite some time, that continuing that evolution of that inflation story that is likely, more consumers shifting to eating at home away from restaurants.
Yeah, and I think we were talking about the Chinese economy, and I feel like we've been wondering really since COVID just how well or not well is the Chinese economy actually doing. But, it's been very much a U.S. story too as of late, right? We're getting mixed numbers, I think, from job reports, inflation data. Are we supposed to view this as the soft landing that the Fed has been referencing? Is that indeed going to occur? Or are things going to be a bit bumpier than that? So we got to keep a close eye on what's happening here. It looks like we're still on track for a single interest rate cut next month, maybe the dollar then moving in tandem with that assumption. So I think we have to watch for that on the macro economy here in the U.S., huge impact on dairy, but also then globally, what ultimately happens if the U.S. economy is weak? How does it look for our export abilities, really from all ag commodities? So Jake, maybe we'll turn that to you, because speaking of export abilities, we've been talking about our neighbors to the north, and not Idaho. I'm talking even further north than that. We're talking Canada. And Jake, you've been on the horn with folks from our squad talking about this potential rail strike, getting folks to look very closely at their protein basis, make sure they have contracts locked up for new crop. And sure enough, here we are recording on Thursday. That looming rail strike isn't looming anymore. It's here. It's happening. So, Jake, what's going on up north?
Not much at all, because they are now on strike. So those rail lines are effectively at a standstill. Workers have been locked out. There has not been a resolution to the contract negotiations up there. As of Sunday and Monday this week, the parties were saying that they were quite a ways apart from each other's demands and offerings, and there was no real resolution in sight. So we will see how long this lasts. There's already arguably a significant amount of damage done, whether they had gone on strike last night or not. You have crush plants and other players all along the supply chain kind of dialing back their production capacity over the last several weeks in anticipation for this, as they try to stretch their storage space there at their production plants and hopefully get the number of rail cars that they have sitting on site already to last a little bit longer. They dial back their production to kind of string this thing along, because none of those folks want to go into a full cold shutdown either. So they've been doing their best to stay ahead of this thing. Well, now a shutdown's here. So we've already had supplies tightening up. We're now getting to where we're going to just have a mess of logistical issues as the longer this thing stays shut down. So, for our feed buyers, the folks that we're talking to the most obvious concern is going to be around canola coming out of Canada. That rail line interacts to a very large degree with our rail lines here. And so now we're going to have this compounding effect of things backlogging here in the US, whether they are on the north or south side of that border. We've also got folks that get a lot of mineral and vitamin and other micro ingredients coming out of Canada. Those are going to be halted. So it's going to probably take at least 30 or 45 days, if not longer, to kind of unwind all of the issues that this is already piling up. You have to think that in 45 days, we're ramping up harvest here in the US when we have some of our highest logistical demands domestically. This could get to be pretty ugly for a while. And I think the best thing you can do is just be in good communication with your suppliers, managing your inventories on site as well as you can, and be ready to be flexible so that if an ingredient or product that you rely on is unavailable for an indefinite amount of time, you're ready to substitute something else in where you can. Hopefully this thing is resolved today or early tomorrow. I think that's probably best case. Who knows how long it can really run, but we're already in it and feeling the impact of that. I think you're probably going to see some short term, and by short term, I mean probably at least 30 or 60 days worth of spikes in basis values. Unsure how this is going to play out in futures markets across the feed space, but if you can't get the product, you start to pay up for what little bit is laying around somewhere else and scraping the corners for it. That's going to play a role for sure. That's the bad news. I think a little bit of good news moving through the market this week is that we have a couple of crop tours underway, making their way across the Midwest. And by and large, the reports coming in so far are in line with what I think the market was expecting. There's some variability in the corn crop for sure, but yields are pretty stout. Probably not the 183 and change that USDA was calling for a week and a half ago, but I don't know that the market bought that number the moment it was printed. That would be a record yield by 6 or so bushels, and the market was pretty steady on release of that WASDE. So a little bit of variability. Keep hearing, feels like there were 2 planting seasons for this corn crop. That's probably fairly accurate. We'll probably have a good chance it's still a record crop, but maybe not a 6 bushel over previous record crop on corn. Soybeans are a little bit tougher to dial in with these surveys. The formula is just not quite as accurate as it is on the corn side, but it sounds like the counts on what we are getting in from the bean side are as good as we could have hoped for, better than they were last year. And we had a pretty good year last year. So I say all that to tell you, it sounds like we are going to have the crop that we are expecting at this point. We won't know for sure. And I think the market trading sideways the last couple of weeks probably will continue to trade sideways until we get into harvest and start running this thing through the combine. But it looks like the crop we're expecting is probably there. We get through a few logistical snafus. Maybe we start to break down basis when we get a whole bunch of grain piling up in front of these rail lines. We will see.
Yeah, and I think, Jake, especially watching the crop tour that the industry is referencing this week, that Pro Farmer crop tour, and our own Mike McGinnis from our Insights team is on the western portion of that tour, so running through South Dakota, Iowa, Nebraska. So exciting to have him there as boots on the ground. But I think that's been the big dialogue, is maybe things aren't as great as the USDA currently is projecting, but things look pretty good. I think between that, you have the logistics issue up north. There's just a couple things out there that it feels like overall, again, are we bullish? No. Does it feel like maybe there is limited downside potentially from where we are now? So we've got our own crop scout here. Have you been out there when you were with Grandma this past week? Did you guys go see any corn? Not this time, okay, because Grandma likes to proclaim that she's pretty solid on her guidance on her own little crop tours. So yeah, Jake, I think it'll be interesting. We've got this breakdown in prices here as we were talking about before the show. I think it's important to take advantage at least of what we've had on the grain and feed side of things, especially given where milk is priced these days as well. Should we sign off here so we can go back to watching Paw Patrol?
Yes.
Okay, cool. So we're going to sign off here, you guys. A huge thanks to Fletch for joining the show today. Great to have you, bud.
Thanks for having me. Happy to be back anytime.
Yeah, awesome. We appreciate it and your insights from the commercial squad and all of your leadership. So thank you for that. We'd also like to thank Corey and the Everag Insights crew for their support. Thank you to Lexi for her production magic. And thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.